Let's move on to China. Equity valuations over there right now are quite interesting from a historical perspective. What's your take on investing in China today?
Well, first, I'd say it's very interesting what's happened over the last 7 to 10 days or so, where China, which feels like it's in a I guess we'd call it a housing-driven recession, saw the government start to make some noise about injecting money and rumors of stimulus, which caused the stock market to just pop off of, I don't know if we call it historic low valuations, but low valuations. And I'm not sure that the government has followed through on that yet, or what the time horizon would be. And it just feels like, even over the last 10 or 20 years, the government says something positive about how they might try to influence the Chinese stock market, and that results in a lot of volatility.
This is a great situation where looking in the rearview mirror is a very difficult way to kind of judge what's going to happen in the future. So China's got a lot of moving parts going on right now. Like historically, China was the fastest growing kind of large economy, and a big part of it was because of the U.S. outsourcing to China. As that's slowed down, you've got some demographic issues, as well as some, I would say, natural resources issues locally that are causing some headwinds for the economy. And so it likely doesn't justify the premium valuations relative to other emerging economies that we've seen out of China historically. So what looks cheap today might not actually be as cheap as it looks as we see the longer term fundamental picture play out.
And I think some of the information that can be the most interesting about China is to look at large U.S. companies that have a significant China presence and what they're saying on their earnings calls about China. Just to pick one, General Motors, a few years ago, their Chinese business was a bright spot and something that they pointed to as a growth engine. It had a tough year, and they're guiding for another tough year in 2024. Which kind of tells you that, it doesn't feel like China's going to turn around anytime soon.
Some of that has to do with the local players, right? There've been really aggressive stimulus and incentives for local car makers, and you're actually seeing some of the Chinese car makers take out some of the European car makers in Europe because they've got so much momentum underlying their businesses from the stimulated growth in China, and they're starting to branch out internationally. I think one of the really interesting stories to watch for a China read is Starbucks. Their big growth story right now is actually expansion into China. If you look at many of their investor presentations, a lot of their materials are talking about the penetration of coffee in China relative to the US. And how that story plays out will probably tell us a lot about how the Chinese consumer plays out, because the story to date has been a premiumization in the Chinese economy with the Chinese consumer. And it's unclear if that can continue or if there are legs for that into the next kind of 3, 5, 10-year time frame.